Good morning, everybody. It's Thursday, July 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 4.5 at 411.75. November soybeans were up 7.5 at 1074.5, and December Chicago wheat was up 13.25 at 598.25. This morning we had export sales report was out, pretty much in line with estimates, kind of on the lower end of the estimates for corn, 538,300 for 23, 116,500 for 24. Soybeans, same story, low end of the estimates, 208,000 for 23, 191,300 for 24. Wheat coming off of a strong week last week was kind of disappointing this week, 240,400. The low end of the range was 300 on the estimate side. Meal, 53,100 for 23, 22,800 for 24. That was sharply below the estimates. The lower end was looking for 150. We also had CONAB out this morning. Their estimate, new estimate for soybeans, 147.34 million tons. That's off of a 147.9 estimate. So that is a little bit lower than what they were looking for. And in the corn side, 115.86, they were looking for 115.5 on the corn side there. CPI data out, so the outside markets, outside market inflation data, down 0.1% from May. So a little bit better inflation news there. The 12-month rate now at 3%, which is at the lowest level in 3 years. So good morning, guys. I hope everybody's doing well. Dustin, one thing to note here this morning on the grain side, outside of export sales, did notice overnight corn open interest up again, 18,720. So continuation of a big build in open interest there in the corn sector. Beans down a little bit, down 1,300. And another interesting note was oil open interest down 5,000. So with that, maybe a few opening thoughts here this morning. Dustin, I know we got the USDA report out tomorrow morning, and then we'll throw it around the room.
Thanks, Dan. Yeah, so CONAB, start there. That a slight bump up in the corn yield from what they're expecting. They had a really, fast harvest pace, which is indicative of their dry, late dry finish. The 115 mark is still, quite a bit below the USDA's 122 on their reports. So we'll see where they change that tomorrow in that WASDE release. But 7 million metric tons is still quite a bit difference. So I think that should be noted. Mm-hmm. The other thing is, we keep hearing all these rumors that we're, extremely abundant on old crop supply. And, we saw that, break spreads and break flat price on that late June report when we got the quarterly stocks that showed all this extra supply that surprised everybody, even though spreads were not really indicating that was going to be the mark when it came out. And now we're actually tighter on the Sep-Dec corn spread than we were going into the report at any time before that, through the calendar year. So Sep-Dec just spiked overnight to 7 under. After trading as low as 14 and 3/4 under 2 days ago. That's a pretty interesting thing to happen out of nowhere, in a vacuum. If we're looking at a basis only contract problem or a bunch of corn on DP that we keep hearing about, you usually wouldn't see that spread narrow up like that unless there's some sort of underlying reason for it. So be curious to see, if there's some sort of news that comes out, maybe there's some sort of Chinese program or something that's causing the SEP contract to bounce. So yeah, and we're getting a decent rebound in corn and beans. I think the other thing to kind of point and look at is the real spiked overnight from that, in part because that CPI print. So it might be more of a dollar issue than a real issue, but largely there's been a pretty good correlation last couple months between real and corn and soybeans. That's kind of deviated the last couple of days, especially for beans. We made new contract lows and the real's on a nice rebound. So it'll be something to watch if the real continues to find support here to finish the week. Maybe there's some catch up to do on corn and beans, especially in light of some of these CONAB numbers. So that's all I have. I'm going to be paying attention to those spreads and find out, why old new spreads are suddenly narrowing for both corn and beans, but corn in particular. That's the curious one.
Yeah, and it interesting. Just in we'll touch on the outside markets here for a minute here with this. You can say better than expected inflationary data. I mean, it appears now that a rate cut is becoming more and more likely as we go through the end of the year. Would you agree with that, or what's your assessment?
Yeah. So it's interesting because a lot of really good people still think that we need higher rates, like Ray Dalio, for example. But we're not in a, Volcker timeframe anymore. We had 30% debt to GDP back then. He was able to take rates to, into the teens without breaking the economy. I think that the quiet part that's not said out loud is that, our debt to GDP has soared so much that we really can't afford to take rates up like that. And everyone wants them down. So inevitably they're trying to find reasons to it. A good CPI print like we had today is indicative that they feel they probably have, a little bit of plausible deniability to start cutting those rates sooner. So yeah, I think that's definitely something that's going to be a tailwind for commodities. You compare corn to things like, crude oil and gold, and it does look pretty cheap. The managed money has been just pounding it into the ground. That's where a lot of the selling's been, is on paper. And that might be part why spreads and basis have been improving, is that you are getting farmers to kind of sit on their hands, not sell at these prices, even though we keep being told that, they're eventually going to have to sell. Basis continues to kind of creep up in some of these areas where we're supposedly a supply surplus, based on those quarterly stocks numbers. So is it the paper, the paper pushing the market past where cash is ready to go right now, and the only tools that cash have are basis and spreads? It could be, maybe that's a sign that funds have gotten over their skis a little bit on the shorts.
Well, it was interesting. We were talking yesterday during the market, and it just commodities in general. I mean, we're going to take OJ out of the picture because that's been a wild and wacky ride. But it feels like with equities being as strong as they are, that it just a theory, but it could be that it's just the short leg of them, spreading against all the equities, and the commodities have had by all accounts, I mean, the fundamentals have lined up to this point, but they've been actively pushing it every single day.
Right. New York equity money is like, you can't even compare commodity money to the equity money, right? It's like so large. So when they do, take a position, I mean, it's like a bull in a china shop. Like that, supposedly market participants, can't have an impact. There's been studies that show, managed money hedge funds don't have an impact on commodities. I would say in my experience that there's no way, right? Anyone that looks at COT data and follows price action knows that they are a massive influence on the market. And, you point to things like wheat in particular, because wheat, at any given time, you can have the number of open paper contracts for SRW wheat at 7 times the total production for the year. It's not as bad as corn. That's more of a 1x times. But 7x times, you get things like what happened after the Ukrainian, the invasion in Ukraine, where there's just a quick exit and too many, non-cash market participants that are in that market, especially the ones that are short. You started to get massive deviation from flat price, where all of a sudden, buyers stopped bidding off of the May and the July contracts during that invasion and said, we're going to bid off the Sep and it's going to be 60 under, and all the spreads were inverted. So a grower in those situations trying to sell new crop wheat at 50 under would be their normal basis. All of a sudden they're $1.30, $1.50 under. Huge problems for convergence. And it's all because too many non-cash market participants in the market. And I think similar things can happen in corn and soybeans, not to that degree because we don't have the leverage on paper versus cash. But, when the funds are record short right now, some sort of unintended, unexpected catalyst that jolts the market in either direction can certainly have an opinion or have a influence on that market outcome. So yeah, I think that, we're obviously hyper focused on our calls and on these videos about where managed money is moving things. And that comes out every Friday. So we'll see tomorrow where they stand again. But we expect that they are record short to a degree they've never been before on tomorrow's report.
Ben, we got a couple minutes here. What's on your mind going into tomorrow's report, and I guess just all things ag?
A couple things here. We're watching that Sep-Dec spread. Did note that river basis along the Ohio River has perked up recently on the break. So it'll be intriguing to see if we find some sales over the next couple days. I think we have, we've traded barrel, we've traded cool weather, we've traded an increase in acres. I think people are generally comfortable with the fact that we're going to have a pretty good crop. We've got to finish out strong. This market, we kind of transitioned from Sep-Dec into a discussion on the funds, which I think is a very relevant topic. And the short just may be a little bit oversubscribed at the moment. And, the managed money does not look at these things the way a normally capitalized trader does, because they have a tremendous amount of staying power before they exit. And, great returns for a commodity manager, 15 to 20% is a really good return for a guy who's managing that. And they're looking at corn going, all right, ample supplies, this crop is made. He's going to make 15% for staying short corn in the July if he doesn't get shook out, or she. And I think that makes them really difficult. The fundamentals will always win in the end. And the aggression or the velocity of their trade can get us disjointed at times from where the underlying fundamentals are at the cash market. And then you'll see things happen where we see a spread start to move, or we see basis start to perk up. So, I look at the funds as they take the market to the sellers and they take the market to the buyers. And when they run out of momentum in either direction, they're typically kind of done with that part of the move. It doesn't mean they're going to turn around and cover today without a reason, but so that velocity backs off now, and maybe they'll cover some, maybe they'll let it breathe. I would encourage anyone who is fascinated with markets, again, to read Reminiscence of a Stock Operator when he talks about developing a market. And they have been very good at developing a market. The other difference that they have, other than being extremely well capitalized, and that these two kind of work hand in hand, is they have a patience that is really, really good. Your typical traders out 10 cents or 15 cents, they're in a panic. They make 10 cents, 15 cents, they take it off the board. They play for much bigger pieces of the pie. And someone explained it to me one time, and they said, if a fund manager loses 40 cents, it's not a big deal. He's not going to get fired for that. He's going to get fired for missing a $2 move, right? So I think you just have to wrap your head around how they trade. I think the fundamentals always win, but because of the aggression, everyone wanting to get on that short train, kind of at the same time, you get some pretty wild moves, and it can happen the other way, right? They're not evil. They give us volatility, and they have the same margin risk as everyone else. So when things go against them, they can go against them cataclysmically. And you hate them when it's in a bear market, but you should love them when you're in a bull market, because they're the ones that are running it up to trying to find where the offers are at. So just a little bit perspective from my end on what funds are and what managed money does.
I want to add one thing to that, Ben, because we've had questions on this before when we talk about them collecting the carry, because, in most traditional senses, when we say collecting the carry, most growers will understand that, if you're selling a forward contract at a higher price, because of the carry, and you're holding that actual physical grain until delivering against that contract, that's the traditional understanding of collecting the carry. When the funds are selling into a carry market and they're not actually dealing in the physical, in a sense, a sideways market continues to allow them to collect the carry, right? Because if you take corn and the flat price for old crop is $4 right now, and D's 25 is $4.50. By the time that we get to D's 25, if that's back down to $4 because we've been in a sideways market, that's the 50 cents collected between today and over a year from now. So that's the idea, is you're constantly buying out of a cheaper contract and selling the next more expensive contract to fall to that level, and so on and so forth. A sideways $4 market would continue to collect the carry, but it doesn't come without risk, right? They are naked short. They're not backed up by the physical in most cases. So it's a little bit different, but they have the advantage of continuing to be short in a carry market instead of long. And if you look at like some of these ETFs that are long only commodities, like a famous one would be like USO, everyone will look at that versus a continuous chart of crude oil and say, well, that performance looks awful. It's because they're constantly buying into a carry market, and that the actual paper market is paying that carry by also always buying the next more expensive contract, letting that fall. And it looks a lot worse than what a continuous chart would look like.
Yeah, that's a good. Those are good points, guys. Just coming into the open here, Rylan. A few thoughts on livestock before we wrap.
Yep, no problem. It was a little bit of a sideways trade here yesterday in cattle, definitely inside. So it looked like there's a bit of consolidation. We are seeing cash trades start to pick up at lower money, 187, 188 in the south. It's about a $1 to $2 lower, and 198 and the north. So little 312 in the dressed as well, which would have been $1 lower. So the market's been on this big downswing. We've been anticipating this top in the beef market as well as weaker cash market, and we are starting to see beef continue to go lower here. So we were at 324.05 down $1.60 yesterday. So you've kind of priced in a lot of that sentiment, I think, at this point. I think everybody's looking at the board and versus where cash is, and just trying to figure out what's going on here with the basis. So at this point, you've got a lot of bad news, I think, kind of priced in before the weekend. We'll see what happens. Hogs, we were pretty much limit down all day in August. So we saw a big amount of liquidation. Open interest was down 4,200 contracts. So it just kind of seems like it's been more of the same. It's been a very one-sided market here. There just hasn't been any good news. Cash was down $3. So just at this point, there really hasn't been any real support here to kind of bottom this thing. At this point, you got new contract lows August, new contract lows in the back end of the market. So hopefully hopefully some of the longs are getting pretty exhausted here and obviously getting shaken out of the market. And so we'll see if we can get a little bit of a turnaround, but right now there just isn't enough good fundamental news to really pull us off these lows.
All right, thanks for the update. Just came into the grain open here. We got December corns up 3 3/4, up 4 1/4 now, 4.11 1/2. November soybeans are up 4 at 10.71, and December Chicago wheat is up 13 1/4 at 5.98 1/4. A couple things to note, that USDA production WASDE report will be out tomorrow morning, 11 o'clock Central. We'll visit about that in the war room tomorrow morning. And we will have, as always, on Friday, Fun Fact Friday for Brian. Big shoes to fill coming back from his break. So hopefully he's got something good for us. Anyway, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Hope everybody has a great day today, and we look forward to talking to you again tomorrow morning.